Mr. Mtaka said everybody can afford a property. From you, yes, he does on his videos. He says we can all get into property. So now it's time for us to break down exactly how do we get into property. What's the first step as a repair specialist, in a credit repair specialist? What's the first things a potential buyer is to look into when they're dreaming of buying a house?
I think we need to start to taking our financial life seriously, guys. You can't come to me a week before and say, in a week's time I want to apply for a bond. Please fix my score urgently. I can't. It's short space of time. You messed up your score over time. I always say I'll fix it over time. It's not an overnight thing. If someone comes in and promises you, I'll fix your score in like a day or two, they're going to scam you. So take your financial life seriously. Make sure that you pay your debts on time. You live within your means. And the other thing that we tend to ignore, which it looks easy, but it's budgeting, guys. If you go spending without planning, you'll definitely be in trouble. Budget easy. Your income. Your income is X amount. You're getting paid. Your expenses, bond, car, fuel, whatever, you have that allowance. You know that I have this money that I'm spending, I won't get in trouble. So take your financial life seriously.
Thank you so much, sir. Now, Nokolo, you are on the legal side of these bond talks, right? Of these financial talks. Can a person have more than one bond?
Yes, that is very much possible. We call that a feeder bond. So what the bank does to ascertain whether you qualify for a feeder bond, they look at whether you have what we call a proxy.
Okay.
So that's where they look at the value of the property and they look at what you owing at a certain time and they say, oh, the difference is like 500,000. So that 500,000 we can then grant to this person as a feeder bond. So, but the trick is you can't have a feeder bond registered on a different bank. So if you had taken the first bank with ABSA, then the feeder bond must be with ABSA. You cannot then say, I want to now bond my property with FNB. Feeder bonds are possible, but it just has to be with one bank. And it depends on whether you do have a proxy. And again, the bank does what we call the financials. Again, whether the credit score allows, like Mr. is saying, they do credit checks again. It doesn't matter whether you have a proxy. If you no longer qualify, and if your finances are not in order, you're not going to be eligible for a feeder bond. And also, it depends on whether you've been paying your installments properly. But it is possible.
Thank you so much. We've got pen and papers, ne? We're taking notes. We're coming out of this place as different people than when you came in, ne? All right. Janet, banks have different appetites for risk. Now, without naming any names, can you share what factors a bond originator weighs up when deciding which banks to approach for a client?
Okay, so basically when we submit the application, I submit to first 4 major banks, which will be your ABSA, Nedbank, Standard Bank, and FNB. Investec, that's a higher end. We do submit, but that's a higher end. So when we have professionals, we do submit immediately. So the bank, first of all, they will look at, are you their client? Are you primary banked with them? If you're primary banked with them, they'll try to retain you. So which means they will look at, you will have an internal scoring with the bank, and the bank will look at that superseding your credit bureau score. So that gives you the advantage of getting approval. But based on your affordability criteria, you need to be able to afford the property. Then they will go out and do the valuation on the property. So the valuation of the property also plays a high, it also determines the interest rate that the client will be granted. In a high risk area, your interest rate will be higher. In a low risk area, your interest rate will be lower. So those are the factors that the bank will look at. So when I get the approvals from all 4 banks, I will look at those things to say, what is the interest rate? that the bank has given the client. What is the loan amount? Is the client getting a full bond or 80%? With the 80%, is the rate better compared to 100%? Because at the end, you need to look at saving at the end of the term. Is the client getting 20 years, 10 years, or 30 years? So those are the things that we look at before I come back to you with an offer and I say, I think this is a better offer for you.
Awesome. Thank you so much. Mr. Mtaga, you've walked this journey multiple times with all these professionals that are sitting with us here. What's one advice you would give to somebody that's coming into the market as an investor? They already have their primary home. They're coming in as an investor and they want to engage the banks. What advice would you give that investor?
You know, a lot of people have this fixed idea that before they buy their second or third property, they need to finish their first 20-year bond. That's a myth, number one. You can apply for as many bonds as you want, provided you afford to pay the bond repayment. The biggest thing is affordability, and that's why we'll have a bond originator here who talks about affordability. We'll have a credit repair specialist that will talk about affordability. So if you want to build that relationship and you really want to invest, that's the foundation is that one, right? However, sometimes you have already messed up your score and you still want to invest. And in other criteria, depending on the relationship that you have with your bank and what your asset base looks like, because asset base does not necessarily speak to property alone. Sometimes you have a high performing business that you've started and it's growing and it's got high cash flow. You can sit down with your banker and your bond originator to say, can we motivate? So a no does not necessarily mean no. Maramajita, you know, no is a no again. But a no does not necessarily mean no when it comes to banking. Sometimes it means fix 1, 2, 3. So when you get that no, ask, why was I rejected? And then they'll give you the reasons. These are the reasons why your application was not successful. And then go back and fix those things and then come back and reapply. Does it make sense? So don't go with the thing, no, they said no. It means I don't qualify. The day I qualify, you don't know when that day is going to be unless you actively plan for that day. So you've got your primary home, you want to buy your second property, try. Don't wait for things to be perfect. Try, you'll be told what you are doing wrong and go fix the wrong.
Thank you so much.
I think, Midrand, sorry.
Yes.
Just to add on witness, the banks will check affordability and credibility. Affordability, it's your money, whether you left with enough money to pay what you applying for, right? And then credibility is how you've been paying your creditors. That's where I come in. Credit score. If you haven't paying your creditors well, you're gonna be in trouble. You know, they might reject your application or even give you a higher interest rate. They will regard you as a risky client.
Thank you so much for that. Nokolo, I've got my bank, I've got my bond grant, all is good. I see the blue bank says, come, we'll give you 5% extra. Can I change the person that gave me my bond grant or the bank that gave me my bond?
Okay, the answer is yes. So that is called switch bonds. So in switch bonds, there's no necessarily a transfer of the property. It's just the person changing because one, like you're saying, Bank B has approached them and said, hey, I'm gonna give you a better interest rate. And sometimes people, they change the banks because they're just not happy with the service. I mean, it doesn't mean that because you've taken a bond with ABSA, you're stuck with them now, even if you're not happy with the service that they gave you. You can do what we call a switch bond, but the trick is in switch bonds, the bank wants you to notify them 90 days before, failing which they will then charge a penalty fee for early termination. So what we then advise the clients is that if there's no urgency in you changing, if you can wait for 90 days, we will notify the bank that Mr. So-and-so wants to now switch to another bank, and we wait for that 90 days so that that penalty fee can get waived. and then you don't have to pay that. It's the only disadvantage, the penalty fee. But if you want to change immediately, then you pay the penalty fee, and then we settle, the new bank then settles the existing bond on the previous bank, and then it gets registered again at the deeds office, follows the same procedure, it gets registered on the new bond. So we get the title deed, the cancellation attorneys gets the title deed from the deeds office. We then endorse and say, this other bond is cancelled, this new bond now is existing on the property. So it's very much possible.
Thank you so much.
Sorry.
Yes.
If maybe I can ask, what are the cost implications for that? If maybe you can explain.
I think everyone wanted to ask this question. Like I said, it follows the same procedure, so unfortunately, we're going to be charging the same price as the bond attorneys. So the same price that we had charged previously when you were registering to ABSA, we're going to charge, for example, if you're now changing to SA Home Loans, because it follows the same procedure. The only difference is that there's no transfer. And also there is an additional fee of 5,000 that the people must be aware of. That is for the cancellation attorneys, because remember there's going to be a separate file now for that attorney that's going to be appointed by the existing bank. I'm making an example with FNB. FNB will say, our attorneys will then assist you in cancelling. They charge normally 5,000 to 6,000, and then the new bond attorneys for the new bank will then charge the normal bond fees, because the procedure is the same.
Yeah. So those are the implications that you have to take into account before
Correct.
you take that decision. You know, weigh your options. Is it worth it to move to another bank based on the cost implications?
Correct. But then at the same time, most of the time when you get the new approval, there will be a difference. Right, because you would have been paying the other bank. Say, for example, you get approved again for 700 by the new bank, which is ABSA in this case, and you are now left with like 600,000 rands from FNB. So what we do as the bond attorneys is we take our fees from that difference, and then we retain them, and then whatever that's left comes back to you. So you don't necessarily have to save, and it's 99% of the time there is a difference that is there, because I mean it's not possible that they're gonna want the whole bond amount that is being granted by these ones. So we take our fees from there, but they are applicable in a sense. You just don't have to save for them.
Exactly. It charges from your equity.
Yes.
I wanted to jump in there on the equity part. Remember what you just explained and said 600,000 is owed to the previous bank. Now they are it's refinancing. Let's put it the way it is. They're refinancing you for 700,000. That extra 100,000, it's not a favor. It's your money, right? In this instance, you are just borrowing against your own money. The first amount, 600,000, belongs to the first bank. The equity element, which is 100K, it's your money, it belongs to you. So even if she's deducting from that money, she's deducting from your money. Because when you are making the bond repayments, you are actually paying back that money. So both of them are correct, but you have to have that balance and check, how much does it cost me in the long term to switch? Is it cheaper? If the interest rate is cheaper, and let's say you were paying 7,000, now you are paying 6,000 for the same. It means over a prolonged period of time, you've got 1,000 rand saving on the bond repayment. But however, if for instance the fees are also high and they are cancelling that 1,000 that you are making on a monthly basis, then it defeats the purpose of what you are doing in the first place. But usually bond registration attorneys are usually cheaper than the transfers. The bond payment, the bond registration fees are going to be slightly cheaper. So it's not going to be a very much of a high amount if it's a 700,000 rands property. Yeah.
This equity you speak of is what you've previously mentioned as money that's not taxable because it's credit.
Yes, nobody can tax you for debt. Remember, equity that you are borrowing against your property, you are basically taking money that belongs to you sooner. And then when you sell the property, you cover that debt. So at the moment where you are getting that equity out of the property, it's considered a debt. So you are getting it, but you are not going to be paid for a taxed for it because it's debt. But however, if you sell the property, let's say for instance, the property is worth 600 and you sell it for 700,000, at that specific moment, you attract capital gains tax. You must pay tax on that money.
Understood. Understood. Thank you so much for that. Now, Jeanette, a lot of us here are business owners. Some of us still finding our feet or freelancing and just quickly opened a business account. What other alternative strategies do you use when financing somebody that's not traditionally employed?
Okay, so when you are talking about somebody who's traditionally employed, you are referring to
Somebody that is a
salary
salaries.
clients,
Yes. Pay slip.
Yeah.
Tina
But
doesn't a
also
pay
a
slip.
self-employed person can have a pay slip.
Yes.
You can write your own pay slip.
Yes.
So we need to get to a point where we pay ourselves a salary. You are working again.
Yes.
Yeah, you are working the whole month, then come month and pay myself a salary and make sure that I get a pay slip. Then when you approach me to say, now I'm ready, you've went to your estate agent, you have viewed the property, we have pre-qualified you, which means we have seen that the money does go to the bank account. You are able to approach your bookkeeper and say, give me the pay slip because I have been paying my salary on the specific date every month, but you must also make sure that you have been paying your tax. As much as the bank, we won't go and verify that you are paying tax. But when we look at the pay slip, I can tell you that this tax doesn't add up for this salary. So we need to get to a habit of doing things the right way. So it's either you pay yourself a salary and you are able to draw a pay slip, or if you don't pay yourself a salary on a specific date, pay yourself and ask your bookkeeper to give you a letter to confirm that you are paying yourself an amount this month, this much, and we can verify with the bank statement. But when we get to that one, then we'll also request your financials, because now you are saying my company is paying me. We want to see that this company can sustain itself. Can it really pay you a salary? You cannot be running a company that a turnover a month it's 50K, and when now you are saying I'm getting paid 60K a month. Where is this money coming from? So we need to learn to be realistic, and honestly, that's the only way that we can grow in business and invest in property. Guys, you invest in property, it's really easy, but if you do it the right way.
Thank you for that. Now, Mr. Mdaga, you have been a business owner for a while and you haven't had a pay slip for the longest time in your life.
I have a pay slip.
Not one issued by someone else, right? So I would, in this question, I want to classify you as an investor. We've heard professionals tell business owners, pay yourself a salary, like Jeanette is saying. We've heard them say, get yourself a pay slip. Can you break down how that actually looks for a businessman when you handle your business finances as well as when now they have to go into your personal finances?
Yeah, you know my story, ne? So I last had a pay slip written by someone else 13 years ago. So I haven't had anyone give me a pay slip for that long. So all these years I've had to do it myself if I wanna buy stuff. In the chapter, in the book, it's more than just money. There's a chapter called Formalize Your Informal Business. And that speaks to the fact that a lot of people, and I've seen those that are freelancers, they'll say, I'm running a business, and you say, okay, you've offered me this service, you were cleaning the carpet, how must I pay you? They give you a Capitec account. And then they don't take any salary, it's just money that they're earning. When it's time to buy a property or a car or anything, they won't be able to get that financing because it's not properly formalized. Like she said, you haven't separated the business from yourself. One, the business is its own entity. It needs to exist as such and have its own bank statement so that the accountant can generate financials for your business. So financials, it's management accounts and your financial statements. They're separate. And then you are either taking drawings or taking a salary. Drawings will be the business is making 100K as an example. I'm taking 15,000 as my salary or as my drawings. If it's salary, that salary will have the tax amount as well. The accountant will do your calculation. If you're earning 15K net, this is your gross. They put that on a payslip. Or they write you a proof of income letter. A proof of income letter is the letter that says, I, accountant so-and-so, confirm that Mr. Muluko Machele earns 15,000 rands from his business and it's paid into his account in this way. 15,000 is his net, and then tax is X amount, his total gross is X amount. So you have to have an accountant in any case. Even if you are writing it for yourself, you need an external person to confirm that what you are saying is true. Because like she said, we are very ambitious. Maybe when you write 60, but your business is making 40, how is the business paying you 60? So they still want that proof from an external accountant. It could be your auditor or your bookkeeper. Answered?
Answered. Thank you very much. I want to bring it back to Unokolo and say, we spoke about me having more than one bond, right? Can my property be bonded twice?
Yes. So when we're registering a further bond,
That's the
that's
second
the
bond.
second bond that gets endorsed in the title deed. So we've got bond number 1 and bond number 2. The trick again can be different banks.
Ah,
Yes.
okay.
But can be bonded twice.
Okay. Now, I'm going to take this back to Mr. Mtak. I've done my further bond. I've gotten an extra 50K for me to start and invest in a different project. How do I grow from there? How do I use that equity right?
It's easy, man. Go to Dubai and enjoy the money. It's yours. Look at my Remember that further bond or the refinancing, it's your money. The bank doesn't tell you what to do with it. They won't tell you invest. They won't tell you to renovate the house. They won't tell you to do anything. So I'm right when I say go to Dubai if that's what you want to do. Enjoy your 50K. I read to Jango pay. But or you can take that money, either put a deposit on your next property. Usually as a property investor, that's what you want to do. Most of the time, Mloko will attest to this, as property investors, we reinvest so much into our portfolio that you don't have any cash. So that refinancing, it might not be 50, sometimes it's 200, 300K, sometimes it's $1 million that you are refinancing from your portfolio. That becomes money that you use to deposit, either start a business if that's what you want to do. So you and also maybe even develop the existing portfolio. You've got the properties in the existing portfolio. Maybe you wanted to add a couple of units that are going to give you X amount of rental. If you've done your numbers right, you've got your approvals from the municipality, that's the money that you use now to start building your project. And then what other people do, I know a friend of mine, Gift, used to do this. When the portfolio grows, he weighs against interest rates on his bond and interest rates on his car purchase. So if your interest rate on your car, let's say it's 13%, argument's sake, but the interest rate on your refinancing is 9%. Instead of buying the car through finance, you take the 200K from your bond because you're paying 9%, you buy the car cash. So you've got 4% interest rate saving on that specific thing. So there are different things that you can do. I mean, I'm not a financial advisor. I'm not advising you. You can do whatever you want with your money. Don't say Mtaka said. I did not say it. I'm just saying what other property, careful, what other property investors do. You don't say that guy said I must take 400,000 and build it into no yawa.
You're making sure you don't trend.
Yeah, no, I think just to add on witness, you know, I think I'm quite impressed to see, you know, young faces. We have a lot of young faces in here. You know, it's ideal to go in business and do mistake when you're still young. You know, you still have age to recover. I'm not saying baholo ba ka ba ka se recover, sorry, but I'm just saying.
He's also being careful.
No, you know, when you're younger, you can make mistakes. I made mistakes. Witness made mistakes in property journey. You know, make mistake, learn, and recover. When you're young, you have that, you know, leeway to do that.
All right. Talking about mistakes, what are the common mistakes that people make when they come to you that you find on their profiles? What are these common mistakes that we make? I'll make an example. I've heard somebody say the mistake they made is that they go to the liquor with their main bank account card, and it worked against them somehow.
No, that actually will work against you if you're driving and you get into an accident. Insurance companies investigate that. I drink myself. Whenever I want to buy something cold, I withdraw cash and buy. I never swipe my card. Never.
Ningas trendy sangish.
Yeah. So insurance companies will go and investigate. They will even go as far as requesting your company bank statements to check where you have been, what you have been buying, you know. So and the other thing is that guys, man, avoid monthly loans, man. The you know,
Payday loans.
Come on, they really work against you in terms of credit profile. You know, the banks look at you as someone who can manage his finances. You know, you always ask for help. You know, so avoid those. And the other thing, bo ausi man, I think you know, bo aus avoiding loans for boyfriends.
Uzenenye, yes, uzenenye.
I have. I have. You know, I had a couple of clients where, you know, they took loans as much as 200K for a boyfriend to start maybe Uber business or whatever. And then relationship went south. The guy is nowhere to be found. And I will see the loan is in your name. You have to pay it. All the best, sister. All the best. But yeah, if you are married, I don't advise you to do loans for your husband, but you can do that because as you married, you are one, right? You can. It's up to you. But the boyfriend, yeah. Thank you, sister. Thank you. But for a boyfriend, please don't do that. Especially woman, you know.
Let's hold it there, Ntate Magene. Let's hold it there. We'll get into trouble, you see.
Can I just add on that?
Yes, please.
The other thing that is a downfall to a lot of people, especially ladies, it's your clothing accounts. In this day and age, guys, you don't need a Truist account. You don't need an Edgar's account. You don't need a Reg account. The Reg is the worst enemy of your life. If you go and open a Reg account, even if you are paying on a monthly basis, believe you me, when you come to me, I pull out your credit report, your score will be sitting on 600, and there's nothing that I can do. There's absolutely nothing because Reg doesn't go and update your credit profile. So let's stay away from retail. I mean, really, guys, you don't need to have a retail account for clothes. Avoid it.
Mr. M?
Buy cheaper clothes, man. Yeah, buy an AddProp
Buy
t-shirt.
cash. Yeah.
It's cash, no loans.
Yeah.
Are you guys providing any loans? Yeah. So I think she's right. You know, most of the time, you think things. It's mindset. You've been programmed that things are expensive. Mara, you can. Why, when it comes to alcohol, you don't go borrow money to drink? But when it comes to your clothes, you want to borrow money to buy a t-shirt.
They actually borrow, even alcohol.
Even alcohol, they borrow.
The monthly loans, most of the money, the monthly loans, most of the money, if you know, you check the bank statements, tops. Mamu Ruby Tavern, you know, yeah, it's like that.
Okay, so let's do this. I think like he said, we've got young people, middle-aged people, people that are parents, and all of that. What I want to implore everyone with is this. When I started, I said, how do you see yourself? And then I also said, what is your 20-year plan? Before taking that, I mean, business people take loans all the time. We've got millions and millions and millions in debt. Millions. So your rage account is nothing compared to the debts he has, by the way. Yeah. I know his profile. It's not necessarily about taking the debt or not taking the debt. Is what is the debt for? And what is it doing for you? You understand what I mean? So even what they're saying the bank will finance you. What is that? That's debt. It's not free to finance you. It's a debt that you are taking. Right? So, but look at what is the debt that makes wealthy people wealthy. We said the poor live for today. A payday loan is for today. You understand what I mean? And we said the very poor live for today. The poor live for this week. The middle class live for the month. The rich plan for the year. And the very rich plan for decades. Your loans must carry generational weight when you are taking them. How is this going to affect the next generation? Vele bana haba safarele payday loan, really. They must suffer because of a payday loan. So it boils down to our mindset. What exactly do we want to take these loans for if we are taking them? And is it necessary to take them? Even property, is it necessary to finance it? You have to understand what you are doing. Don't just take this loan for the sake of... You know when they say you will never go wrong with property? They're telling you lies. You can go wrong with property. One wrong move can wipe out the entire portfolio. One wrong move. You can have 100 units. I know friends that were very rich 3 years ago. They're not rich today. So don't take this thing as, no, as long as you're investing, it's not automatic. Aguna magic. You have to apply wisdom. You have to be intentional. You have to plan. You have to engage with the right people. Now, guys, let's be careful.
Thank you so much for that, Mr. Mdaga. I want to open up to the audience. I've asked my number of questions, so I want to check, do we have questions in the audience? Let's take questions. We're sitting with professionals, and probably for the only time you'll see them for free. Because I can tell you that there's some serious invoices that we pay to get these individuals to say anything. Just to ask them, what do you think about this? We've got a gentleman there. Yeah, we'll use that one, it's fine. Okay. The gentleman in the brown jacket, please stand up. Tell us your name. State one question, please.
Good morning, everyone.
Yes.
My name is Gordon. Before a question, I'd like to comment. Mr. Mdaga, you disappointed me when you asked about the 20-year plan. What if someone has more than a 20-year plan? I never got a chance to raise my hand. So expand it further. It's okay to have a 25 for a 30-year plan.
Yes.
You get employed at 20. Yes, you retire at 60. No, I meant when you were asking in the room. No,
you know, he was waiting for 25.
25 for 30 years, and you ended up at 20. So, yeah.
I ask his.
Yes.
All right.
And now to my question. There's something we are not touching on, and I would like to hear the comments of the panel or of the room. How do we deal with historic debt from tenants? Someone owes you, they manage to leave, they owe you 2 months' rent. When I ask around, the question is small claims court, because maybe the rent was 7,000. They say, 14,000. So do we have a system that we follow and settle that? Because it seems to die off, and it's 3 years now, they forget about it, but they put a dent of 4 months non-payment there. How are we, advising each other around that subject? Thank you.
I like the question. You know, a couple of days ago, I was looking at historic debt. And I said to someone, you know, if these people can pay my money, I can literally have $1 million in the account right now, because this one owes you 30K, this one owes you 50K, this one. So here's the thing. You don't necessarily have to go through the route of small claims court. Remember, you are a business. You need an attorney on your side, and you need to hand over those people to be pursued. And that's why systems like AddProp, we're going to introduce the credit bureau part of it. You can list those people on the credit bureau. It's very important, right? When they're signing with you to become a landlord, to become a tenant, they are agreeing that on a month-to-month they owe you. So you can list them on the credit bureau if they don't pay you, right? So that solution, we're working on it. But remember, if someone owes you and it's over 3 years and you've never pursued, that debt has prescribed. Debt prescription means if you owing someone or a company and they haven't said anything to you for 3 years and you've never acknowledged the debt for 3 years, it means that debt is prescribed. They cannot pursue you for it. But remember, all of us here, sometimes we are owed and other times we owe. So when you are owed, do what those whom you owe do. Pursue.
Mr. Moloko?
I think to add as well, a witness, there is insurance as well that you can take to insure the monthly rental. So, yes.
You touched on something very important. One. So that insurance that he's talking about, I don't know Takura. Takura, are you here? Is Takura here?
I think he left. He did come to say hi to me, but I think he left.
Takura is one of our partners. We are going to introduce something on AddProp where we're going to have your insurance, your rentals insured. And it's going to be possible for you to also be able to borrow money from AddProp. It's around the corner. We'll borrow.
But I borrow it right. I we were talking about credit. Yeah.
No, we'll blacklist you. but it's only for those that are already using the platform. There will be systems that are going to allow you to collect your rental on the platform. So based on that, with what your income will be, you'll be able to borrow money to do your property projects, your renovations, as well as maybe building new units. So it's coming. So we'll help you insure. Thank you for that, Chief.
No, I think you covered business. I think insurance will actually assist, man. But off record, mine, I deal with my tenants very well, but that's off record.
Asizwang.
Yeah, that's
Leo asizwang.
I wasn't here.
No, that one we didn't hear. We heard insurance, ne?
Because
all right.
Because one, unfortunately, the law, it's on the side of the tenants. You know, and it's costly as well to pursue these guys. Imagine pursuing someone for 10,000 while you're spending money on the attorneys. You know, you might even write it off.
So on that one, Orix, we're a tech team today. Ne?
Yeah.
On that one, so depending on the relationship that you have with your attorneys, they can get paid based on what they've recovered. So you don't pay upfront. You a contingency fee. And she's agreeing, and she's an attorney. I think she wants clients. So if this one owes you 10K, you have an agreement. You recover 10K, you take 2K, 8K is mine. It all depends on what that relationship is.
No, I think it talks to a structure. Witness, you mentioned that formalized informal businesses. Yes. You know, where you have attorneys, you know, you have a structure in place. You know who to contact when you have issues. So that will really help.
Yes, and that's also, Mr. Mtaga will assist for the purpose of pursuing, because if the file is with us as the attorneys, firstly, people don't know how, but they get more scared if it's the attorney that's
Even the way
liaising
they-
with them,
yeah.
other than when it's you via WhatsApp on some, please can I have my money? So if you then approach us, that's exactly what I was going to say, Mr. Mtaga. You can approach an attorney as opposed to small claims court. Then we can work on a contingency fee and develop that relationship and say, I will pursue on your behalf, and then whatever that I get, I'll take my portion from there. So it's best that you contact an attorney for that instance.
I think that Jane has to add. Can I add something?
Imnandi lo conversation, ne?
You know,
Ah.
you know, I'm a property investor. I'm interested. Those things, they are close to my heart, guys. So as an investor or as you run the company, you must have your provision as well. You know, the ideal collection rate of rental is between 90 and 95. So for me personally, if 90%, 95% of my tenants paid, I'm quite comfortable. I know I will have rotten apple there and there, you know, but I'm happy, you know. So again, it speaks of having a structure in place.